welcome to Conversation with Your Congressman. I'm John Tierney, your Congressman, and I'm pleased that you could join us for this show. Today we're going to be talking about the housing situation and the threat or problem of foreclosure that so many of our residents are experiencing or fearing at this point in time, with the economy in the condition that it's in and the loan situation, mortgage situation being what it is. Our guest, and we're fortunate to have him, is Elijah Cummings, who is the ranking minority member on the Government Oversight and Reform Committee in the House of Representatives. He's also on the Transportation and Infrastructure Committee. But for today's purposes, we're going to focus on the foreclosure. And Elijah has been a leading advocate for the homeowner, for those people that are in the sights of banks or lenders who are thinking of foreclosing on them. And the attempt by government, by the president, by members in the House and the Senate, to get some relief out to people so that they can, in fact, stay in their homes if at all possible. Elijah, you've been great to join us on that. You're a graduate of Howard University, yes, and then the University of Maryland School of Law.
Yes.
You were a student government president.
Very good.
As was I, so I knew that you had that on there.
So we were ready for
same
leadership.
year too, I think, on that. Representative Cummings has been a real leading advocate in the House, forcing the committee to attend to this issue, bringing in witnesses, bringing in the government agencies and the people responsible for it, and trying to make sure that some relief is there. Will you tell us a little bit about what you've been doing out in your district,
yeah, sure.
Representative?
You know, we started getting calls a few years ago where people were literally losing their houses. And the calls were coming in so fast that I assigned one person to just deal with foreclosure. I thought it would, actually I made it a temporary position for 6 months, and it's lasted now for 3 years. Oh. And then we had to bring in another person part-time to help her. We get about, I'd say, in the last 3 years, we've had probably 11,000, 12,000 people who were in trouble.
Just in your district, not even the state of Maryland.
Well, it's mainly my district, but because I've gotten a reputation for doing this, I tell my staff not to turn anybody away, because these people are usually very desperate. And so I would say mainly my district, but also outside of the district.
Well, people should know your district encompasses Baltimore.
Yes, Baltimore. That's right.
Which is how large a city is Baltimore?
Baltimore is about 674,000.
It's almost your entire district, then.
Yeah, yeah. That's it's about 60% of my district, because it's also shared with 2 other congresspeople. Mm-hmm. So what we did, Congressman, is I decided to start, and what I noticed is that there were certain things happening. People would call in and they would say, we were trying to get a modification and our paperwork was lost. They would say, we tried to get a modification and we contacted, say, John Doe at X Bank, and they got the runaround and they could never get back to John Doe. And then the other thing they said is that they had worked out deals, and then when they found, when they checked back, nobody knew anything about it. So I figured the best way to address this is to have what we call foreclosure prevention conferences. We've had 6 of them now over the last, say, 2.5 years. We're averaging somewhere about 2,000 people coming to these conferences, maybe a little less, and we're usually able to help at least 65 to 70% of them.
And how is it you help them? I mean,
and what we do, I'm glad you asked. What we do,
segue.
What we do is we literally bring the banks in, bank representatives in, and we bring in, and we literally set appointments. We go on the radio, talk about this conference, and then we tell people to call in. We then hook up with the banks, talk to the banks. We set appointments for the people. They come in on a Saturday morning. Usually it lasts from, say, 9 to 3 on a Saturday. They come into one of our local schools, and they literally they bring their hardship letters, pay stubs, anything that can show their financial situation or change in it. The banks bring their computers, and they literally work out deals right there.
It's amazing. One of the problems, and we've had some people, far less number than in your district on that, but we've had people come in with similar problems that they wanted to work out a modification, but they were finding the banks wouldn't return their call.
Right.
Or every time there was a call to the bank, it would be a different person who wanted to start all over again, or the documents would be lost. And because the president's program, which was designed to sort of try to encourage banks to do that, was voluntary, they got the feeling a lot of these banks were just sort of trying to avoid them.
No doubt about it.
Doing it. So my question is what incentive did you get to give the banks to come to this forum and participate, or do you think it just would have been a public embarrassment if they were invited and they didn't show?
I think it was partly public embarrassment, threat, and I think it was because they knew that we were going to hound them, and I really believe that a lot of it came from the power of the office of congressman. I don't think they really wanted to be on the bad side, and that's my belief. And I got involved in it myself. I mean, I made sure that people were being treated fairly, and so it worked out pretty good. But it shouldn't be that way.
No,
it shouldn't be that. You shouldn't have to. I shouldn't have to. You know, we all have about the same number of employees. I shouldn't have to dedicate a person and a half
for one issue.
For one issue.
Yeah. Well, we've actually dedicated almost a whole person in our office to the same issue, yet we have far fewer claims than you've been experiencing. We don't have a major city like Boston or Baltimore there, but we've got Lynn, which has 90,000 people, and Gloucester and Peabody and others. But because it's separated a little bit by area and geography or whatever, we're not sure that we're getting all of the people with problems. So we've been reaching out, trying to work with them, and we're probably going to try potentially to do one of the programs that you've been doing and seeing if it's a large enough group that can do that. We've had 200 people come through our office with this issue, which is far less than,
let me tell you,
4,000 or 5,000.
I can guarantee you,
people will show.
There are a lot more people in trouble than that. And what we found is that a lot of people feel ashamed, and they don't want to come forward. And I always start out, every time we have one of these fairs, I start off by talking about an experience I had in law school where my student loan money didn't come in on time. And I came home and I found my worldly possessions, the few that there were, sitting on the sidewalk. And I tell them that I can feel the emotion right now, right this minute, that I felt back then almost 35 years ago. And I tell them there's nothing to be ashamed of. And so when they hear the congressman say that, they realize, okay, I'm freed up a little bit. I can talk about this. Yeah. And I talk about it on the radio, too. I mean, I don't always tell that story, but I want them to know that they can feel ashamed and lose their house or put away their shame and just come forward. And then, what happens? The other thing that happens is very interesting. When they get there at these conferences, they realize that they're surrounded by hundreds of people who are in the same predicament. And a lot of these folks they should have been placed in prime loans, and they were placed in subprimes. A lot of them just had hardship, as you well know. Yeah. I mean, if you don't have health insurance and you run into a problem,
you're done.
That'll knock you out. So,
well, I'll tell you, most of the people that we do are people that actually had a good purchase. They weren't doing something like buying a house without giving the proper documentation and trying to get around it. These are people that had a job, had an income, bought a house that was reasonable for their family, were making the payments, and then somebody in the family lost a job. Yeah. Or two people lost a job.
That's all
it just became next to impossible. But if they didn't have to pay as much as they're paying, they could stay in. It wasn't that they want to pay nothing. They want to run away from the obligation. They want a temporary break or a break that allows them to get back in the game. And we've been doing it on a one-on-one situation with people. The reason that you and I know about this issue is I think under your leadership primarily, there's been about 15 or 16 of us in the House of Representatives that have been hounding the administration unmercifully almost, because they deserve it, because they've got to come up with a solution to this.
No doubt about it.
And even though, as I said, we had about 200 people at any one given time in our office, I felt the problem was bigger, and I think it's larger on that in our district, but nationally it's a crushing issue.
No doubt about it.
And you were talking the other day, we had a meeting with Edward DeMarco, who's the acting director of the Federal Housing Financing Agency, FHFA. And we'll talk about that role in a little bit or whatever. But one of the things you were explaining to him was the CEO or of PIMCO, one of the major bond companies, was saying how much money could be put back in this economy if the banks stepped forward and modified these loans, even if they just wrote down the interest rate to the current rate.
No doubt about it.
What did you say? It was $50 or $60 billion.
Yeah, about $55 billion, somewhere in that area.
And the notion on that is that that people wouldn't walk away from their principal, what they owe in the principal part, but that for a while they get a break on the interest rate to what the interest rate really is.
That's right.
If you're in a house and you have a job and you're making your payments and you have good credit, you can walk into the bank today and rewrite your mortgage from 5 or 6 or 7% down to almost 4%, and get a break.
Right.
But if you're having a hard time, and you want to stay in your house and you want to make the payments and you're at 5, 6, or 7%, you might not be able to write it down
Yeah.
to that new interest rate because your house might not be worth as much as it was at one time, or maybe somebody in your household lost a job, so you're not as good a security risk. And that sort of just goes right against the grain of this, because if you could get the write down, guaranteed you'd be able to stay in your house.
That's right. And a lot of people watching us right now probably saying, well, what does this have to do with me? And people don't understand that, when you have a foreclosed house in your block, it brings everybody else's. It can be one house,
right,
and it brings everybody else's value down. And then it's like circles, and it affects neighborhoods even close to your neighborhood. But you're right. I mean, a lot of times I look at folks who may lose a house, okay? They got to live somewhere.
Mm-hmm.
They're going to pay some rent somewhere. They're going to find, it may be less than what they were able to pay in a mortgage, but they got to live somewhere. And then I think about the fact that if you put somebody out of a house, you got a vacant house. Then the city has to spend time boarding it up, making sure.
You could have vandals,
right?
You could
That's
have
right.
fire, you could have drug gangs working out of there, whatever, depending on where your city is. So, I live in a group of condos, about 35, 36 condos in Salem, and we're very happy to live there, whatever. But one went to foreclosure, and it did have the effect on everybody else's property. Others that wanted to sell or refinance their property found out that they're saying, oh, well, one of these things went for foreclosure, therefore you're all gone down in value. You take that and you do it for a whole community.
That's right.
And take more than one.
That's right.
I mean, there are blocks in some of the cities in our districts, that really reflect a turnout like that, and the property values go down. The interesting thing is, most of the statistics that we see indicate that if the banks would modify the loan, or whoever holds the paper now, the servicers of the loan or whatever, would modify the loans, that actually recover more in the long run than if it went to foreclosure and then was sold in a fire sale at foreclosure.
I have no doubt about that.
And that's the ridiculous part. I think the statistics are somewhere about 60 to 70% of loss of foreclosure, and probably somewhere between 23 and 30% loss in a modification that would keep people in their house. So the question then comes, well, why won't these banks do it?
Yeah, that's a major question.
Yeah. I think they want to keep it on their books as a higher price that isn't justified anymore. The values aren't where they were, but they want to keep it, making it look like the bank's healthy. Mm-hmm, mm-hmm. And the other aspect of it is there's no fees involved with working out a modification. But if they go to foreclosure and sell again, they get fees and other costs paid to them, and it keeps on churning on.
But John, part of our discussion leaves out something that's very significant that you touched on just now, and I tell my constituents I am convinced that we in our nation have a compassion deficit. Mm-hmm. If you think about it, if people are so greedy that they wouldn't mind seeing a mother and their two kids set out so that they can get a few extra dollars per transaction, that's very, very sad. And I think about my own block, the block I live in. I live not too far from downtown Baltimore, middle class area, but right across the street from me, there are 15 houses on one side, 15 houses. These are all row houses on each side, 15 houses on each side. Across from me, there are 5 foreclosed homes. And I think about one of them, a fella, he could have probably, his wife lost her job. They put him out, and he was willing to give a reduced payment, even if it was for a while. He tried to work out something, couldn't work it out. And that house has sat there for a year.
Doing nobody any good.
Nobody, And then we've got four more. But some kind of way I want to go back to something you said, too, about this whole idea of foreclosure in housing. The Fed chair, Bernanke, said the other day in a hearing, he said there's no way that we will deal with this recession effectively unless we deal with foreclosure.
Exactly.
It makes sense that that's what you've got to do. Because if you've got people underwater and they're trying to catch up, and then you've got other people who basically walk away from the houses because they just don't know what to do, you're you're not solving that problem by allowing people to either write down the principal or work out some kind of deal. Then I think it's like a weight on the economy that makes it almost impossible for the economy to go back up where we want it to go.
Yeah, you know, I was looking through my notes here for Dennis Cardozo, who represents
Yes.
an area of California that's particularly struck, by this problem, was saying that 22% of the people whose houses are now not worth as much as the money that's owed on them are walking away.
Yeah.
They just give the keys back to the bank and they walk away. That can't help anybody on that. Now, his district's devastated, and he has a piece of legislation, and his idea is, look, interest rates are around 4%. So if you just said for anybody, that you think, first of all the money that went into keeping the financial community alive, the amount of money that the taxpayers put in so that our whole financial system wouldn't crumble to the ground, and it saved a lot of banks that had a lot to do with the problem that we're in.
Right.
Don't want to take any blame for it, but they had a lot to do with it. And now they're not doing much to help out. And his notion, his bill as I read it, is, let anybody who wants to rewrite to the lower interest rate, rewrite to the lower interest rate.
Right.
And that, could put as much as $100 billion back in the economy. And here's how. You could owe a certain amount on your mortgage every month, but if going from a 6.5% rate or 6% rate to a 4% rate would save you anywhere from $200 to $2,000, depending on what your mortgage was, that's money now you're going to do one of two things. You're either going to take that extra money and either pay down your mortgage faster, or you're going to spend it.
Right.
School clothes for the kids, gas in your car, groceries, and that keeps the grocer, the gasoline shop, gasoline guy operating. I mean, it gets your economy going. People have customers. So it's $100 billion collectively on the thing. So that's Dennis's idea. To other people that are out there flying around, it's like, well, what do we look at those ideas and do it? Zoe Lofgren, another member of ours, a colleague of ours from California, she went out and had an idea that is endorsed, I think, by the consumer bankruptcy lawyers or attorneys group. And hers is that, you don't take any principal away. So you leave the lenders, the banks, wherever they are, you don't touch the principal amount that's due on the loan. But for 5 years, if the people are going to go into bankruptcy, and they're heading that direction anyway, you let a bankruptcy judge say to them, well, for 5 years, you pay just on the principal. You won't owe any interest. Zero interest for 5 years. And every payment you make reduces that balance that you owe on the principal amount. At the end of 5 years, you take the balance, and now you do a 25-year loan on that, mortgage on that, at whatever the current rate is at that time. So they don't lose anything on their principal. People don't get put out of their house, and they get some more equity into their house by paying down on that principal amount and move forward. But it's an idea. It's worth talking about. It's a way of giving people a chance to stay in their home, give the lender, the people to whom the debt is owed, as much back as they're ever going to get, keep houses from being vacant in your neighborhood, and get the economy going a little bit on that. And because I think Bernanke's right, Elijah. I don't think we're going to get anything moving until people feel they're going to be stable in their homes and that they have some stake in their homes, a little equity.
Yeah, we've got to. It's when I think about the whole idea of modification, as you were talking, I couldn't help but think about a number of people that I know have effectively modified their loans, mortgages. And I got to tell you, it makes a world of difference. Oh. I know people who may have been say they were spending $1,500, and they got a reduction of say $350. That $350 is like worth $1 million.
Made all the difference.
Right, because they say, "Oh, Cummings, now I can do this. I can do it now. I can stay in my house. Yeah, we're going to have to pinch pennies a little bit, but it helps me. It's just enough to get me by."
You talk about the stigma earlier, and what I see is we do a lot of work with our food kitchens and people, and now the lines are getting longer, and you see people who are embarrassed to be there because they'll say to me, I've got a nice house and I've got a decent car, but we've lost our jobs. Those bills don't go away or anything, and we just don't have enough to make ends meet to the point where we're not even able to really keep enough groceries on the shelf for the family. So not only do you let them stay in their house, but maybe you let them buy enough groceries at the grocery store for their family and get some dignity back into them that they think they've lost. But people have to know that these things are there for them.
Right.
That this is exactly why we have these kinds of protections or safety nets beneath people, not to be embarrassed to take advantage of them, but because now that you have a situation, you can take advantage of them and try to get yourself back on your feet.
Well, I hope that people that are watching us, I always tell my staff that whenever we do a show, I want to make sure that we get people to act if they have to. And I'm just telling people as they're watching us that I hope that there are people, there's somebody sitting watching this right now who is in the position that you just stated. They know they're going through some difficulty. They feel very uncomfortable because they really don't want other people to know. But I got to ask them one question. What would be worse? to see all your furniture sit on the side of the road, or to try to get the help of the congressman and others at various agencies that are good agencies that are working to try to help folk. I would beg them
take
advantage of it. You got one life to live. This is no dress rehearsal, and this is that life. And you might as well try to live the best life that you can. And by the way, I want them to know this is bigger than them. It's not just about them. It's about their children, and it's about actually
their neighborhood.
Their neighborhood and generations yet unborn. Because one of the things about a piece of property is that it's something that is passed on from generation to generation. People are able to get loans with using it as collateral, all kinds of wonderful things. I often think about my mother, who's 85 years old, and she lives in the house that my father bought years ago. And so she's 85 years old, living rent-free because the house has been paid for. But that's something that she can hold on to. And so, whenever I go to our conferences, I tell them, Under Armour, the people who make the sports apparel, is based in Baltimore. And they have this commercial that says, "Protect this house." And I tell them that should be their number one goal, protect this house. And I'm hoping that people that are watching us will take that into consideration.
Well, I hope so. I mean, because it really was the foundation of security for families.
Oh, no doubt about it.
And that's why it's so traumatic to people now, that when that's shaken, that whole idea of security and how the family can be secure is shaken. A lot of people have their investment tied up into that. It was their college future for their children. It was the protection for themselves as they got older. So this is why it's imperative that we take care of this issue, that we deal with it, that we look at some of these suggestions that have been made either by Congressman Cordoza or Congresswoman Lofgren or the president on his programs and make them better.
Yeah.
I mean, there's about 1.8 million people who've been helped out so far with the programs. It's not enough.
Not enough.
It's pretty close to 4 million or more people that need the help on that. And so I admire the fact that you've been leading the rest of us as we go after Edward DeMarco, who's the acting director of FHFA, and others to do more.
Well, the other day,
the other day we almost all lost it.
It was pretty fiery in there, and
tell people a little bit about that meeting.
Well, we had asked Mr. DeMarco to come in because many of us, including you, we were just getting fed up with a lot of excuses. We felt that our government could do more. We felt that a lot of commitments were being made, but those commitments were not always being kept.
I should stop you right there. The FHFA, where Mr. DeMarco is the acting director, is the body that is now the Fannie Mae and Freddie Mac, the people who don't make loans, but they were buying the loans that others made. They were getting insolvent. They were put in receivership, and this FHFA, that Mr. DeMarco heads, was put in charge as a conservator. He was the receiver for them.
That's right.
So that's why we were talking to him, because what they do, what Fannie Mae, Freddie Mac,
affects
and
everybody.
FHA, the people that buy this paper, do affects everybody. They're the ones that can forgive.
That's right.
They can modify, or they can, for the other half of the loans that they don't actually guarantee or own, they can have a great impact on the banks, Bank of America, Wells Fargo, other banks, on what kind of behavior they have.
That's right.
So we didn't think they were doing enough.
That's right.
And you invited him in for a meeting I don't think he wanted to have.
No, I don't think he really wanted to be there. But he needed to be there.
Absolutely.
And he needed to hear members of Congress. And we told him, and you were quite stunning. I mean, the way you presented your case, in the case of your constituents, we made it clear to him that we were fed up. That we see these people at the grocery store, and we see them at the supermarket and different places in our neighborhoods, and these are our neighbors, and that they were suffering. And one of the things that caused us to have great concern is that the president, when he last addressed a joint session of Congress, said that he had devised a program which would allow people to get the lower 4% interest rate as opposed to maybe 6 or 7 that they have now. And so we were excited about it. I mean, and he also said he didn't need Congress. That was not very exciting.
Administrative action to do it.
Because we figured it could get done quickly.
Right.
And so then we wanted to see what the timetable was on that. And because we wanted to be able to tell our constituents, this is something that's going to happen, it's happening, and this is how you do it. And he really did not have true answers for us on that.
We all understood. There were about 16 of us in there, and about half of them from California, because they've got a really, even a bigger problem in some other areas of the country. But what was hard to take is they said, well, look, they didn't want to originally deal with people who owed, who actually owed more than 80% of their home. We said, well, that's ridiculous. That's the problem of being underwater. Is your house isn't worth that. So then they went up to 105%.
Right.
So if your mortgage was 5% more than the value of your house, and now he says he's going to go up to 125%, which is a move in the right direction on that. But it was that type of movement that we wanted for them, and waive some of the fees, do something about the cost of an appraisal so that you could get it done, and do something about the way that they appraise so that they don't take a whole neighborhood down because one house is in foreclosure and all of a sudden just automatically write the others down without a better assessment. These are the types of issues that we were talking to him about, and we think he's a little slow on it. The reason I think that I got upset with him is he's a career employee. He's been there for a lot of years. And
30 years.
He wants to do the right thing or whatever, but he's not been appointed for that position other than acting. And the reason he's acting is the president wanted to appoint a fellow named Joseph Smith, who had sort of the notion that we ought to do something radical, that we ought to write it down, and he couldn't get approval in the Senate.
Right, that's right.
He couldn't get approval in the Senate. So we're stuck with this guy, or he has to be replaced by somebody else who's in the agency. The law doesn't allow the president to go outside and put an acting person in that isn't already in the agency. So we really need to get the Senate to move on this thing.
No doubt about it.
And they need 60 votes for everything they do over there. And there are some that I think are just intent on seeing things fail because they want to see this president fail. But let the president appoint somebody in this position that we can then, as Congress, hold accountable to move on and get something done here. I think that's important.
No doubt about it. We going back to that compassion deficit, it seems as if the Senate would make it a top priority to have a person in place who could affect so many of our constituents in a very positive way.
And then would actually force them or act to make them do it. Tony Judd, I don't know if you ever reading of his things, he wrote this book called Ill Fares the Land.
Okay. And
one of the things that he wrote, and I thought was interesting, is that we no longer know how to talk about inequity, immorality, and the lack of fairness or injustice on that. And I think that's what you do when you see people out in this Occupy Wall Street or Occupy Boston or wherever they might be. That's what they're worried about. They're worried about things that are unfair, things that are not just, things that are inequitable on that. And it's inequitable that people would be in this situation with their homes and not be able to get themselves out of it when they're willing to pay. They're not looking for, to avoid anything or whatever. They're just looking for a way to do it and a little break on the time and the circumstances. I've got to thank you I know how busy you are and how difficult it was for you to even set aside a little time for us today, but you did it. And just want people to know what a champion you are on this. And I hope in your district and mine and elsewhere, they'll come forward and look for the help that they should have on this issue. And we'll keep working as hard as we can to make sure that something moves down here to give them the assistance that they need.
Well, John, I thank you for your passion, and I really mean that. I mean, when I watch you, I know it comes from your heart, and I really appreciate that.
Thanks very much.